Hello, I'm Angeline Ong, and welcome to this edition of Beat the Street, the show that gives you all the tradable news you need to know ahead of the Wall Street Open. And what an open it's going to be. Everything is moving after Israel, Hamas, US stocks slipping, oil rising on that Middle East conflict that's still developing. We'll get you the latest along with our very special guest, Bill Blain from Charlotte Capital. Airlines also reacting. United, Delta, American also suspending flights to Tel Aviv, and drugs M&A to boot. Bristol Myers Squibb is set to buy Mirati Therapeutics for up to $5.8 billion. Good afternoon, I'm Angeline Ong, and welcome to Beat the Street. Not long now before Wall Street starts trading, but let me just show you these charts. We're seeing a huge amount of volatility surging on that news. Also, looking at the indices, we are seeing it ticking lower. Let's show you the hourly chart here on the IG platform. Also, what's interesting, as I mentioned earlier, is that we are seeing almost every sector impacted by this developing story. Just showing you Chevron, because oil companies, big oil, including Chevron, ExxonMobil as well, which you can trade all sessions on the IG platform. They are showing that they are rising around 3% each. United Airlines, as I mentioned earlier, and the other airlines too, they are also all session stocks on the IG platform and moving lower. Gold miners also rising, and defense companies, no surprise there, advancing. The US bond market, though, was shut on Monday for Columbus Day. Let's have a quick look at the situation right now and cross straight to Bill Blain from Charlotte Capital. Bill, thank you so much for joining us. I know it's been a terribly busy morning for you given the developments. Where do you think we're heading from here?
Oh, that's a great question. There's clearly a lot of volatility in the market. A lot of it is reactive. There is a fear that we may see a repeat of 50 years ago, the Yom Kippur War, which triggered the start of the oil shocks, leading to the global stagnation and stagflation across much of the West by the end of the 70s. So we've got that fear about oil prices, but I think it's just the extraordinary shock of what we've seen over the weekend. Absolutely shocking pictures. And they are clearly designed to incite and create all kinds of panic across markets or across populations. Here in the West, we're furious by the pictures that we see across the Arab world. They will be equally furious when Gaza's bombed flat. And that seems to be the aim of the groups behind this. And I think the fingers are now clearly pointing at Iran as having supplied and advised Hamas on how to mount these attacks. And it raises all kinds of questions about what happens next. Now, the key thing that we're going to be watching is how Saudi Arabia reacts. Will Saudi, and remember that Saudi's major enemy is Iran, will they step back and not do anything, very conscious of how the Arab world is likely to think when they see the damage being done in Gaza? Or will they decide to make a call for a step down and a pullback, and possibly even try and limit the market effects on the market by breaking their current pact with Russia on oil prices, and possibly even add more supply to the oil market, which would certainly stabilize markets? Otherwise, everybody is looking to see, what does this mean for bond markets as applied to quality and safety? What's it mean for gold? But the thing to watch is Saudi and oil.
Now, we've also got breaking news saying that Israel is shutting down offshore its gas field, Tamar gas field, in terms of output there, and is looking at alternative fuel sources to meet its needs. Are we going to see a continuation of this, and perhaps because of the geopolitical situation, oil prices then ramp up, and then we see this inflation problem come back again?
Well, all it will take is a relatively mild increase in energy prices to kick off the whole inflation scenario yet again and put Western economies back into the same situation they were earlier this year. Now, that's one of the worries. We have so much concern in the bond markets just now. As you're very aware, Angeline, we've seen bond markets, it's described as routed, but the reality is bond markets are now adjusting to the likelihood that inflation is going to last longer than expected. It's going to be some time before we see central banks able to ease interest rates. So it's the higher for longer mentality. That's what's causing the problem in bonds. And that's what's going to cause problems in the equity markets, because equities have to reprice to relative value against higher yielding bond markets. If you then add all the uncertainty about a further energy shock in this news out of Israel on gas holdups, it's another example of where you're going to get further instability. And then, of course, the rumors circulating this morning that Russia was involved as well, mounting a major cyber attack on Israeli command and control. And if that's the case, then this becomes even more uncertain, adding yet more volatility into the mix.
And speaking of volatility, we'll be speaking in just a moment to tastylive's Chris Vecchio. But first, let's just take you through the Israeli impact on travel. We've got United, Delta, American suspending direct flights, Air France, Finnair also suspending direct flights, and EasyJet halting flights with Tel Aviv to adjust timings. Bill Blain earlier there speaking about volatility, and this is tastylive's specialty. Christopher Vecchio joins us from New York, from tastylive, part of IG Group. Chris, we've got an enormous amount of volatility out there. As I mentioned earlier, which bit of the market isn't touched by the Israel-Hamas events? Where do you see volatility the most in the coming week?
Well, it's important to contextualize these events that happened over the weekend. We have seen the second Lebanon war in 2006, July, August 2006, that led to a swing higher in gold prices and bond prices, a temporary setback in equity markets. But the scope and scale of what just transpired over the weekend, I think, leads me to believe that we're now in a window where volatility is going to stay elevated. There is a geopolitical risk premium here for quite some time. Going back and looking at all of the conflicts that have occurred between Israel and its neighbors since the founding of the country, this is the largest single-day casualty that Israel has faced, perhaps since the Holocaust. And this puts the conflict onto a different level than what we have seen, even, I think, perhaps potentially eclipsing the Yom Kippur War. As Bill noted earlier, there's credible evidence to suggest that Iran may be involved, which, as an intermediary, Hezbollah may be involved. And this can quickly spiral into a multi-state conflict in short order. So the volatility uptick that we've seen here in equity markets, which erased the declines over the past few days, the uptick in volatility that we've seen in oil markets, in gold markets, that's likely to stick with us now for the next several sessions. Of course, we come into the end of the week where we have CPI from the United States due on Thursday, and then bank earnings coming out on Friday. There will be volatility here for the foreseeable future, plain and simple.
Chris, if you had to choose two of the biggest events this week, would you boil it down to CPI and the geopolitical risk we're seeing?
Yeah, absolutely. There is a refocus right now on whether or not the Federal Reserve has done enough to stem the tides of rising inflation pressures. CPI, of course, is going through a window with which there are positive base effects, lifting up headline inflation pressures due to the composition of the data over the past year. And so right now, the market is geared towards seeing relatively higher inflation readings than we would have expected going through the middle of the year. But whether or not that means the Fed needs to do more at this point in time, given the lagged effects of monetary policy, is another story unto itself. That becomes a major waypoint for markets this Thursday. And even if we do see a market reaction to CPI, it's probably eclipsed by whatever headlines are coming out of the Middle East here over the next few days. As you mentioned, we now have news that Israel is shutting down one of its gas fields offshore, and that's helped produce a bump in gas prices, energy prices globally here. So we are very much tethered to the whims of whatever happens next in this winding conflict between Hamas and Israel.
Right, thank you very much, Chris Vecchio there from tastylive in New York. I'm sure we'll be checking in with you as the week proceeds, as we get more news out of the region. Now, talking about corporate news, we also have a lot of M&A that is in the headlines. Bristol Myers Squibb buying or to buy Mirati Therapeutics for up to $5.8 billion. This is to diversify its oncology business, and comes at a time when it's trying to also make sure that when its patents expire, Mirati's portfolio can help Bristol to offset the losses in sales. Bristol isn't the only company that's gone on a shopping spree. We have seen Pfizer, Merck, Sanofi all leading the M&A revival this year by announcing multi-billion-dollar acquisitions, and there is likely to be more given the cash reserves amassed during the COVID pandemic. And just touching on another story that I want to keep you up to date on, the UAW strike. This time, union workers at Volvo Group's Mack Trucks have overwhelmingly rejected a proposed 5-year contract deal and will go on strike. This is according to the UAW. The president saying that he's inspired to see UAW members at Mack holding out for a better deal and ready to stand up and walk off the job to win it. For those of you that are just joining us, the UAW has been on a targeted strike against facilities of the Detroit 3 automakers since September 15th. About 25,000 of the 146,000 UAW employees at GM, Ford, and Chrysler parent Stellantis are on strike. So it's a fast-moving story. And just before we go, we also have had our analyst, Axel Rudolph, looking at the S&P 500 for us on a longer-term view and on a technical view.
The S&P 500 is really interesting as a proxy for all the other US indices, because on Friday, despite much stronger than expected US non-farm payrolls coming in at 336,000, nearly twice the estimate of 170,000, the S&P 500 ended up the day on a positive note and did so actually quite strongly, still closing the week down in negative territory, but it was an indication that perhaps we could bounce off key support. And we can see that here on the daily financial bet. You can see here that we basically bounced off the early to mid-May lows between 4,214, 4,187. And on Friday, after the non-farm payrolls data, we actually retested that key support area. You can also see here the red line, the 200-day simple moving average coming in that area around 4,225. And despite all of that, basically bounced off that support area and tested nearly that key resistance area, which remains in focus now between the June and August lows between 4,328 and 4,337. So from a technical perspective, despite what's going on in the Middle East at the moment, it'll be interesting to see which of these, either the resistance area or the support area, will give way first. Because if we were to manage to rise above 4,337 and ideally also above the early July low at 4,378, to me that would mean that we have finished an Elliott wave ABC correction and that we are heading back up again towards the 4,600 area at the July high. But on the flip side, if we were to fall through this key support area, perhaps on heightened tension with regards to the Middle East and it escalating with Iran and US basically getting involved, we could, on a fall through 4,187, fall all the way back down again towards the psychological 4,000 mark for the S&P 500. But right now, for me, it looks more likely that we see further upside in the days ahead.
Thank you very much, Axel, there, taking a look at the technicals for the S&P 500. And I can tell you that we just had some news come through. U.S. Defense Secretary Lloyd Austin said the U.S. will send multiple military ships and aircraft closer to Israel as a show of support. As I mentioned, we are going to keep a close eye on the reaction on the markets to the story for you. But for now, this is the latest edition of Beat the Street, the show that follows all the action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @Angeline Ong on Twitter. This is IGTV.